Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday, the 23rd of February, 2024. And the time, well, right now we're getting 6:30 Chicago time. So we're getting poll results. They're coming back on the election. We'll find out in the next hour or so how Miss Haley did. If she didn't do well, big problems for her, then I think she's got to be dropping out because this should be her star night. And if it isn't, I don't think from here she'll do any better. It's interesting to see the polling coming out and what the number one concern in America is. Believe it or not, immigration. And if New Hampshire immigration, then you ask yourself, whoa, because they're not being flown there, they're not being bused there. Then that means it's really permeated into general America in a big way. We saw it in Iowa, now we're seeing it here. So the Biden administration has got this all wrong. Kamala Harris, it should fall on her head. She was given the role when she was VP, and she didn't do diddly with the job. She sits there, talks about it. I was watching her today. Not impressive. I'm scared if she became president. So I look at just what's going on through that, and I'm finding it interesting. The second thing, we're in the earnings report, so you're getting big moves one way or the other. Today, D.R. Horton down hard. Netflix doing exceptionally well. We got more coming out. This is a week we're getting all the big boys, and then for the next week or two. So you got quite a bit. Today, we saw the Bank of Japan come out in the morning, and they held steady on their policy. The yen is down to the 68 level, not far away from their lows. And it doesn't sound to me, in listening to Mr. Ueda, or rather I read, I didn't listen, he speaks Japanese, so I was listening and reading his comments, and it's very clear he wants to see how wages come in, what the wage inflation is going to look like, and that tells me that it'll probably be summertime, good shot of summertime, before he decides to do anything, as most of the big unions negotiate in March. So they'll get a number. He won't see the impact for the April meeting. He'll probably be able to see it by the summer meetings, and that's where I think the bank is most likely to act. Tomorrow, we don't get it's Thursday, we get the European Central Bank. They come out with their monetary policy. I expect them to sit tight. Bank of England is next week, and we are next week. We had today the Richmond Fed came out with their manufacturing numbers. They're terrible. Yet, the U.S. stock market, as much as they try to break this baby, it doesn't come down. It just stays where it's at. And that's impressive any way you want to look at it. The market is enamored with the idea still that the Fed will be forced to cut rates. I think the market is wrong, but as a chartist, I never fight the charts, and we'll get to them in a minute here. In the metal markets, we're watching peace talks at least move forward between Israel and Hamas through third parties. At first, we saw yesterday that Hamas told Israel, get your soldiers out of here, keep them out, end the war, and then we'll release prisoners. Well, that isn't going to happen. So today, Israel did counter, and they said if the Hamas leaders will have free exile to leave the country, then peace can come to the country. They cannot be part of a new government. That isn't going to happen either. So now we're back into where can this all go? And everybody's trying to get something done. The fact that everybody's talking is good. Now, there was a sentence that I read in Reuters today where they have agreed to a 30-day ceasefire. I haven't read that on other news wires yet. So maybe I read it wrong. I'll admit, maybe. I don't think I did, but it's possible. But that would be good. What's going on is 24 Israeli soldiers killed in a home in Israel, for sure. The people there are upset with this. They're losing soldiers. Are they ever going to get rid of Hamas completely? No, unless Hamas agrees to leave. That's my belief. All right, they're too embedded. This tunnel system that we see is beyond amazement. Not a maze. I'm not playing words there. It's not a maze, not amazement. It is amazement. Got it? So I look at all this and I go, wow. Now, we struck yesterday the Houthis again, as you know, in Yemen. But today we struck Iran militant groups back in Iraq. So the U.S. is getting a bit more aggressive in what they're saying. I enjoyed today when I was listening to comments by U.S. officials that they came out and said that the new government post-war in Gaza cannot include a Hamas representative. That wasn't the case a week ago. I don't know if that's flying something to see how it flies out there or what. All right. In the gold market, we're in a corrective mode. That's about all that you can say. This is a weekly chart. You are still over the 18-week average of closes. So the market's looking still pretty good. You're consolidating. Do you see that all of a sudden? The market is still caught, and I pointed this out to you the other day, between this break low off that high when the market made new all-time highs here into the 2150s and then pulled itself back. The trend is down, but could easily turn up from here if you start taking out this high, right over here where that arrow is. And that high, I'll give you the number because it's an important number now. If this high, the swing line high of 2041.90 were taken out now under this current pattern, that could give you at that point higher lows, higher highs, which ends the downtrend pattern of lower highs, lower lows. Where are the moving averages? Right there, 2038.90. It's interesting as can be that that is the stopping force right now. What held the market on the current break? Just take a look at the 200-day moving average. It also worked over here. It was a good zone number where the market ran into problems. It was 2 days in a row here, and the market bounced away. Now, that won't keep working that way forever. Past support weakens the more times you attack it. So to me, if you're going to get bullish, I've given you a number that I think could set that off. In terms of Bollinger Bands, you see how well the market did hold. Bollinger Bands, my friends, are probably the most individual trading tool I've seen for profit. You heard the word, profit, or liquidation, not stops, liquidation of longs or shorts, ideally with a profit, that I've ever seen. That's a pretty strong statement. But over and over you go there. At the end of this, I've put together a video for you. Our course on it, I think it's 13 video chapters. You will learn this. I believe you will master it. If you put a little time in it, you watch what I do in the mornings with the included morning videos, and all of a sudden you go, whoa, Ira keeps saying if you hit that, blah, blah, here's the checklist of the parameters with it, and away you go. This was, when you got there, a coverall short area because you were oversold, not embedded. If you're embedded, it's a little different. So that was it, and now the market is looking, what do I do next? And that's right where you're at in gold. What do I do next? The gold-silver ratio, backing off of a new high that it's come up to. It was in this range one time before, and it sold off pretty good. But because it was there doesn't mean it has to sell off again. It's just that the silver market's got its own woes, as you can see. But it got down low enough 48 hours ago to call it a day. Embedded reading, I don't think the pros completely got out of shorts. Number two, you got a crossover that's now happening where the 18-day average just got over. You can see it right here, the 200, the 100, the green one, and the market made a new low. It did the work that you so often hear me say on moving average crossovers. The goals were hit on it. Now, if the market's losing the embedded reading, which it is, and let's come back here and look at the day's event yesterday, which is Tuesday. It had a 16 reading. Today, remember, I know I'm putting this out Tuesday night, but we're in Wednesday trade. You got a 23 reading. It is saying if this market closes where it's at right now or higher, it loses the embedded reading. If it loses it, it is a strong signal that price is going back to the 18-day average of closes. Period. It would have to regain the reading right away. Don't know if it can. It is right now Chicago time, 6:37. We have a long way to go. We got to get to 4 p.m. tomorrow to know if that's going to be lost. But if it's higher than this later in the morning, big problems, okay? So just want you to know, the higher it goes now, the harder it's going to be for it to not lose the embedded reading. So, if it's a short, I'd be concerned tonight. Copper, this is where the battleground should end up, right here. The combination of the 200-day average and the 18. They should fight right there. If you'll step with me here, and this is why I want you to learn Bollinger Bands the way that I teach them, and it's the way that I teach them. Bollinger by themselves, no. The slow stochastic with it is everything. It's by itself, I'm sorry. You just learned that the 95% of the time you stay with it. When do you stay with the trade? When does the trade tell you it's going back to one of these key averages? Without this, you can't tell. This is the other part. It's equally as important. So here you closed on Friday, the 19th, right there. Yesterday, you lose the embedded reading. What did I say yesterday? I said, now that it's lost it, the odds favor the market's going to go up and challenge right here. It would have to re-embed today, and if it doesn't, that's where I think this market is going to head. You tell me what it did. You don't see that? Exactly what it said. I know it's magic, but it works that way. That's what's beautiful about magic. Now, the platinum market. Platinum is still bearish. It's flirting with losing the reading. It's got a 20.37. This is not a spot to be adding. This is a spot that if you had multiple contracts, you go, maybe I should take a little bit off the short side, but I got to see that it can stay over that 20 level. If the market makes new highs tonight over 909.40, it is a problem for the bears. It would then have to reverse everything and get back under because it's so close. 907.60 and stay under it. The problem is the higher it goes, the easier it is to lose the reading. So you're at a danger zone right now. I didn't say anything other than a danger zone. It is still in the bear camp. In the dollar index, you came right down to the support level of the now 200-day average. Now, this market has been fighting here. It couldn't get over it there. It fell back, and having an outside day up at that number screams to me, I want to use that word again, screams to me that instead of that now being a number it's going to fight to stay underneath, it's fighting to stay over it. Where could the next numbers go? Try 103.75 to 103.91. Do me a favor. You're watching me on YouTube, right? Go back a week or two. I predicted, I said, I think the market can get back up to that 104 area. If it follows through the way I think it could right here, game going. Why? Because you got an embedded reading. So you'd have to take out today's lows. Tomorrow, that is Wednesday. We're in the session that we'll be talking about. We haven't opened Wednesday trade yet. This is Tuesday. I know I'm on Tuesday, but Wednesday would have to take out this low or Thursday. Is that clear enough grammar? Okay. The other currencies are open. This one isn't, as you can see. You still have Tuesday up here. When you and I take a look at other currencies, we will see that they'll have the other. Let me just get them to you. Well, all the other markets, they're already in Wednesday, but you'll get there. As you see, I said currencies, I meant metals. Screwed up right now. All right, take a look at this Bollinger Band. You'll get a pretty good idea as to what I'm talking about, why I teach it so much here, and the advantages it had. I wish I had this back earlier in my career. Take me back 25 years and what this would show me, oh my God, okay? I mean, it really changes the results of trading, all right? Does that mean you'll make a profit? No. Does it mean that you'll make a loss? No. Here's what it means. It's another tool for you, but a really good tool, a liquidation tool, which is something most people don't know where to come out of markets. You get in, how do you know where to come out? Your stomach crunch? I made enough money. I have a feeling this is it. Well, those things don't work. What works are the numbers on the charts more times than not, all right? If they're good numbers and you learn how to work with them, more times than not. Nobody walks on water. So, IraEpstein.com, move up there. You'll see an icon, go to that. IraEpstein.com under the word education. You'll see the enhanced Bollinger Band course. Give it a try. Like I said, 13 video chapters. You get the charting software. You're going to get 2 weeks of me in the mornings showing you the videos, how to use this, and the charts for that day. And then on the weekends, you'll see how I apply it on the weekly charts. The whole thing unfolds right in front of your eyes. I'm Ira. Have a good one.